All right. So with that, want to just welcome everyone and thank you all for joining us today and kind of discussing a pretty key topic and a timely topic in terms of, the y-axis business model and how it's kind of resilient throughout all types of market conditions and sort of, do a little sensitivity analysis on, in a situation here, how do we kind of perform and what are some of the things we have going for us and maybe, some of the more challenges as well in other situations. So, but before we get in that, we'll just have a quick around the horn hello from everyone on the call. So, AE, if you want to kick us off.
Hey guys, welcome. Thanks for joining.
Hey everyone, it's Bobby.
Hey everyone, Mr. Mister here. Good to be here. Thanks for joining.
Hey everyone, it's Wally. Happy Friday.
Alrighty, good stuff. And then, as always, cold summer here. So, wanted to just get right into it and get things kicked off. So, like I said, kind of a timely topic, had a pretty big pullback across the board in the markets. So wanted to just explain, that kind of even in market pullbacks and different types of varying market conditions, the y-axis business model just remains viable, and wanted to just kind of contextualize that a little bit better and sort of walk you through some of that. So I think one of the major drivers overall to really consider is just the big demand for yield. Right now for example, like the 2-year US Treasury, which is pretty standard benchmark, is yielding 0.15%. And then, I mean, even like the German bond, the 2-year on that is yielding negative 0.68%. So you're actually paying to provide liquidity. So, there's roughly $18 trillion in actually negative yielding debt globally right now. So even as you've seen across the board, kind of yields compress a little bit and this market pullback, yields have kind of come in. According to Skew, which is like a pretty popular data provider, kind of the median DeFi rate on stable coins just recently made a low to about 3.5% APR. But like, that's like a huge drop for people that are DeFi native and crypto native. But that's still, 23 times better than what the 2-year US Treasury is going to offer. So, institutions and people with real money and, even pension funds that are really clamoring for yield and, scratching the surface to find any bit of return and yield that they can find, especially in a safe way that they're not taking any underlying like principal risk on an asset like an equity. Uh, you know, they're just scrounging for this yield right now, given this broader context of negative and low yielding debt. So I mean, you're seeing that now with institutions demoing private pools on Aave. Stani leaked that I think it was probably about 2 weeks ago now. Um, yeah, just institutions are kind of knocking at the door, looking to get into the space, and really just attracted to these yields. And a lot of them are, especially if you're running like a pension fund or something, like you're not here to speculate, you're here to just get attractive yield on USD stablecoin. And like I said, you're not taking that principal risk on any asset. And you're seeing that growth. I mean, like year to date, the USDC, like USD coin, the market cap has 5.5x. So you're seeing that massive growth in stable coins. And, a lot of that's driven by, these institutional players looking to, park their fiat in stable coins and then take the stable coins and earn attractive yields in DeFi. So that's like a tailwind that's going to be with us for a long time to come. And I mean, even the other day, like $1.7 billion in stables was withdrawn from exchanges, like one day last week. So basically, you're just seeing a massive flight to stable coins, and that's kind of where y-axis and the meta vault comes in the picture. Is we're at the beneficiary of that trend, and if people are going to be parking their money in stable coins, then we're going to be there to accept the stable coins and help them earn high yields and really be a great service and a great partner to them, especially given the security features that we offer and the security focus, especially things that are kind of being built out across, V3. And then, take the other end of the spectrum and say we go back into like a raging bull market, with the launch of canonical vaults in V3 and supporting Bitcoin, Ethereum, Link. People want to retain upside in that underlying asset. Well, perfect. They can, earn yield on it through us and retain upside in the asset. So, definitely well positioned in really either scenario. And, just some kind of additional things to sort of consider is that when we have these types of like pullbacks and market cooldowns, especially for an extended period, is developer talent, for example, gets a little easier to attract. So right now in the process of onboarding a strategy developer, and those conversations get a little bit easier if the market has kind of cooled off a bit. So these are some positive things that that can come from a market pullback. And then even like I was saying before with canonical vaults and supporting Ethereum, Bitcoin, Link, like those have relatively evangelical holder bases where they're just holding regardless of market conditions. And if you're going to hold regardless, you might as well earn some yield on it. So that just shows how we'll be able to attract TVL and generate revenue regardless of the broader market conditions. And same thing with the stable coin aspect, is we'll be there to attract that TVL and help generate revenue for holders. And again, like back to the continued bull run case, like if we were to continue on into a bull run, it's going to be higher yields across the space to be able to farm, and going to even further accelerate that flow over from traditional finance capital and institutional capital attracted by the high yields in the space. So and also the yAxis rewards that we'd be putting on top would be worth more, which allows us to support more TVL and generate more revenue. So that just gives you a little bit of an idea of in different situations, kind of how we would perform, and some of the things that we'd be able to offer, and the advantages kind of either situation. And then obviously the disadvantages that come with a market pullback are just, like I said, compressed yields across the space. But again, it's still vastly superior to what the traditional finance world would be able to offer. So happy to be on the right side of that secular flow of capital. So we'll take hopefully that little intro and context was a bit helpful. And with that, we'll take it over to some of the questions that were asked in advance. So the TISC, and this fella, he asked why have we not said his name to date. To be honest, you didn't have the period between the TISC part, and so I didn't know how to pronounce it, so I wouldn't want to mess it up. So I was just glossing over the name portion and just getting to your question for you to make sure that we didn't hurt any feelings with the mispronunciation. But happy to have the period for clarification now. And then also asked, what are the tentative plans past the 4 eras as they stand for the DAO? So looking toward that longer term vision again, advanced security features such as automated monitoring and response and in-house insurance will set us up well to really support that traditional finance capital coming over that wants a safe, secure place to earn yield. And the DAO directed management will be finding strategies, and they're incentivized via the management fee distributed to stakers, and that becomes a more powerful incentive in like let's say a post emissions environment as well. And then in addition to that, just really on that pathway toward decentralization, and really just that's one of the big thematics of the Great Harvest, is helping people contextualize and understand that you're earning that slice of the future cash flows, and that's why you want to grow your stack now. So helping people kind of understand and see that long-term vision. Second, it wasn't really a question, but the second topic of the week is Zemus. He basically wrote a nice little poem for us, and I don't know if we really have an answer to that. So I think with that, we'll move on to Saint Jeezy. Said, really like the UI of the site, the ease of use, and shocked that the market cap is where it's at. you know, and just asked if why there isn't more of a presence on Telegram. And sort of the answer to that is, generally speaking, just kind of have to allocate our resources and our, community resources where we can. And, Discord's layout kind of just caters to more organized, productive conversation. And we've definitely just found a better home here. So have tended to allocate the resources more to Discord rather than Telegram. And that's relatively popular across the space, as most projects tend to have the most active community presence in the Discord. Misam asked, is everybody planning to sell or trade after the Great Harvest? Will that not drastically drive the price down? Is there an incentive in place to continue holding the coins after the Era 1 Great Harvest? I would hope so. So, there's a couple of incentives kind of at play here. Some of the things I kind of hinted at earlier, but basically, so your share of the Great Harvest is your stake value at the time of the drop. So you're gaining eligibility throughout the era, and then your stake value at the time of the drop. So, if you dumped every single token after you gained eligibility, well, then you're not going to get your share of the drop. That's pretty self-explanatory there. And then, even looking further beyond that, we've talked about this kind of extensively in many of the calls, but gauges are going to help drive token utility, because vault users will be able to direct emissions to their desired vaults, as you've kind of seen successfully implemented by Curve Finance. And this provides incentives to vault users to hold the token and integrates the usage of the token directly into the platform. And also there's going to be, with the Great Harvest, is a big boost to staking yield with gauges through the Great Harvest throughout Era 2. So that will be throughout Era 2, and with that, the longer you lock in, the more yield you earn. So there's that locking incentive mechanism as well.
Just to tag on to that, Cold Summer, sorry to interrupt.
No, you're good.
Just like, for example, the big account that we see at the moment that's got a $30 million deposit in the MetaVault, and it's dumping like 4,000 to 5,000 tokens a day, essentially, or at that rate at least. So with the gauges, what's really cool about them is that if you're not using those rewards to vote for your particular vault, in this case the USD vault, your emission is going to be drastically reduced. So that kind of behavior won't be incentivized going forward, and the people that are actually earning more are those who are using their rewards to then put it back towards their vault, such as the Link Vault instead. So it's like a neat kind of system which incentivizes good behavior, which we've seen work before, and just, like you said, at Curve and now Convex as well.
Yeah, no, that was more helpful color and helpful context, Bobby. Really appreciate that. And I think, we're in a nice position of being able to use something like that that's had a successful implementation elsewhere, and leverage that along with the things that we do really well, and sort of kind of create a best of both worlds type of situation. So Timmy Toes had a series of questions about kind of project strategy. Really great questions and good discussion. Fostering good discussion. So basically, Timmy Toes is asking, are we targeting, personal investors first and then transitioning to institutions? Kind of what are the milestones to make that switch, or things that we would, want to see accomplished before we make that switch? And then, what is the strategy currently for attracting personal investors? And should we be targeting something like BSC to be doing that, like Binance Smart Chain? And then, if our selling point, what's kind of the main selling point? Is it security? And sort of like, if so, can you kind of elaborate on that? So basically, one of the main milestones to really kick off that transition toward institutional capital is the V3 launch and the build out of the associated security features, such as automated monitoring and response and built-in insurance, and these other security features, such as TNC has even put in like this halt flag feature, which is in the worst case scenario, if there was a malicious governance takeover, that users' funds would still be able to be saved in like an absolute complete edge case, worst case scenario. And then in addition, just as always, like vaults will be audited, and TNC is just a very security focused developer. So that's just, you know, the biggest thing is really just making sure it's audited, and also just having these features in place that really are going to cater to the institutional capital, um, on that side. And that sort of, like I said, comes with the V3 launch and then successive development and iteration on V3 from that point forward. You know, it's really important to these institutions that their probability of their principal going to zero is minimized as much as possible. So, you know, being able to improve that, we're going to improve their return profile, their expected value, and all things that they kind of look at and evaluate when making an investment. So, we'll be well positioned there. And this current period kind of just serves as a like a bridge period as these features are sort of able to be built out, and so you're almost in a type of a, you know, a pre-launch environment. And then, you know, getting to the other points about like attracting personal investors and Binance Smart Chain. Basically, you know, BSC is a potential consideration post V3. I mean, there's a lot of things going on over there right now. But we could look at like other scaling solutions and kind of have our pick there. Is like what's gaining lasting traction post V3 launches. You know, we want to write the code for the flagship product and get that set first before we start kind of deploying elsewhere, because it wouldn't make a whole lot of sense to deploy, you know, the current meta vault somewhere else while, you know, just to replace it in such short order. So and then another like anecdote on the security side as well is the meta vault doesn't allow smart contract interactions, so we wouldn't be exposed to the type of exploit that somebody like a Yearn suffered. So that's like a nice security anecdote as well. You know, TNC is really working on solving that for V3 to allow certain whitelisted smart contract depositors and retaining that same in security and integrity while still opening up more pools of capital. So, you know, a lot to unpack there, but hopefully that helps you kind of describe, helps you understand like the vision a bit more, and the strategy and the main selling point, and the value that really drives, especially to people that are looking at their return profile in a very you know, systematic way. And it's not just, you know, they're not just aping into smart contracts like many DeFi natives do. So 2DA asked some great questions. So looking at, you know, treasury management for other protocols, and you know, that's definitely a goal for us, particularly after V3, since a lot of treasuries hold Ethereum. So, you know, community can definitely help this effort by kind of making proposals within the projects they're involved with already, because I know, you know, most people are involved with a few projects. So if you just are, you know, you notice your project has a treasury and maybe the treasury is sitting idle and not earning any yield, then you can look at, you know, making a proposal and suggesting in their governance forums that they look to deposit those idle assets. You know, Ashitaka did a pretty great job in Ideas Hub and highlighting some areas for potential partnerships in this front. And then 2DA also asked what impacts staking APY. Is there, you know, fixed rate or locked staking? So it's a fixed rewards per block that goes to the staking pool. So it's just determined by the amount of yAxis in the staking pool. So it's like you have a fixed size of the pie, and then as more people claim and compound, the pie basically gets cut up into more slices. And you know, even at current rates, it's obviously still extremely attractive and industry leading. And it's, you know, winter stash boost is going to be soon, and then the great harvest boost as well in era 2, in addition to the drop. And then, you know, to the locking component is that Gauge will introduce a time lock feature in era 2 as well, like Bobby was mentioning. And then Echo Patient asked about a marketing push into era 2 and how the community can help get the word out. So yeah, there's a, you know, marketing sprint is in the works leading up to V3 launch right now. You're seeing kind of some early works of that right now on Twitter. There's a nice post about getting people hyped up for the Canonical Vault's 6 weeks away, and you know, that gets already gotten over like 60, I think it's like over 60 retweets or something like that. So getting a lot of engagement over there. So that's good to see, and sort of a a first step along the way. And we've discussed pretty extensively the marketing strategy last week in the weekly yAxis, and sort of the multifaceted approach there. And we've gotten some great feedback on that. We got some feedback recently from a large fund that basically commented that our marketing efforts have been awesome. So, great to see that, and continuing to leverage and refine those efforts into a marketing ramp for V3. So, that stuff's going to come in time, and just be on the lookout over the coming weeks. I know we're looking to put something out about the partner program that we've hinted at a bit pretty soon, and some of this other stuff. So, looking forward to continuing to put things out on that front, and get people ramped and aware of the launch of V3. And the community can definitely help and plays a huge role in this. I mean, you guys are a driving force for the project, and if you are in existing communities and you can help recruit TVL, such as through like a proposal on the treasury management side, you can facilitate partnerships, and these other types of things where you're in other projects and you can kind of spread the word out, but do it in like a productive, tactful way. I think that would be absolutely fantastic. So, and even just small things like a tweet or a little graphic or a meme, anything helps for sure. And then with that, so that's all the kind of predetermined questions. I think we got some fantastic questions this week, and some good stuff about strategy and vision and value proposition. So some nice stuff there. So with that, we'll get into some of the questions that were asked live, and we'll look to get it kind of cut off at halfway through the hour. So if there's any other remaining questions, we can get those fired away now. So Harada Siegel, if I pronounced that right, I apologize, said that he has a daughter that would love to do a TikTok piece on on yAxis. So hey, I mean, if you got that at your disposal as well, we're happy to get our name spread out on TikTok as well. So there's community has got a lot of options to help get the word out. Flynn asked a question that I'll swing over to Bobby. Is that Bobby's mentioned a few times, there's sort of levers that he can pull later down the line, for as we kind of approach era 2, sort of what are these levers, and how big are they? So I'll toss it over to you, Bobby.
Yeah, so we do want to protect the launch of the era 2 of the canonical vaults, because that's really like our main product, right? So we want to make sure that token price is nice and healthy, because that will attract in more TVL. So an example of something that we can do is just to launch a sushi swap pool, for example, and put some rewards on that one, and that creates the effect of people buying into the project. Because just like we saw for the era 1 launch, if you stick some rewards onto a brand new pool or a brand new vault, then when it has very, very low TVL, then you get ridiculous percentage APYs. You get like 1,000,000% APY at first, which draws in capital. And we saw the effect of that with the token price round up to $80 at its highest. So yeah, I mean, it's things like that you can do, just as an example. So we are planning to do something like that in the future. We can just wait for the appropriate time to do that.
Yeah, and just to build off of that as well, like Bobby was mentioning, the whole incentives behind the gauges, and how that generates a little bit more like stickiness of capital and longer term alignment, and more value accrual and utility of the token. And I think that's key in terms of kind of sustaining that run over a longer time period. So definitely improving the tokenomics drastically with the gauges, and like I said, building off an already successful implementation. So that's nice to have something to kind of fall back on, and as a real world example of something that's already working.
Yeah, so people generate a lot of buy-in into the token suddenly, and then you have this added utility of the gauges on top of it. And of course, we're still at the very beginning of our emission cycle. Essentially, we've still got a long way to go. So we've got lots of different tokens to play with, and lots of different opportunities or things that we can try as well. So yeah, that's one reason why things are segmented into 3-month eras, because it allows us to have a little bit of flexibility to react to the market. We didn't want to plan everything that was going to happen in era 4 right now, for example, because we wanted just to see how it kind of went, so that we can then adjust things as needed. So that's exactly what we're going to do.
Yep, thank you. Thank you, Bobby, for that. Yeah, definitely wanting to remain flexible and nimble throughout different market conditions. Then we had another question about basically the ease of depositing into the vault, and something like a fiat on ramp are these types of things are things that we're going to be looking at in later eras, hopefully era 2, but it's at least being considered and vetted, and definitely on the list of top tier priorities is a fiat on ramp to make that whole on ramping process easier. And then in addition, like just to address one of the points as well, with 3CRV, that whole conversion from let's say USDC in V3, that we're gonna reopen back to normal stablecoin deposits as well. So that whole transition will be kind of taken care of. And then if we even look to deploy on one of these scaling solutions, for example, then gas fees will obviously be minimized, and as a more longer term solution on that front as well, in addition to the fiat on ramp partners. And a few more minutes here. So if anybody has any last minute questions, I see somebody any last minute questions, feel free to fire away. We'll try to get to them. Otherwise, thank you for all the great questions today. And I think, more and more questions get better and better every week, and talking more about future strategy and such. And, I think it's really helpful for a lot of people to hear and talk about, and the community to really be involved with that. So. Misam asked about, are we making sure to learn from errors over at Badger, and kind of overcomplicating things. And I know, for example, TNC always likes to write simple code, because simple is more complex equals more risk. So looking to be simple, secure, very clearly communicate that security value proposition. And like I said, what that does to your distribution of returns is fantastic, and increasing the level of automation as well. And with the integration of Chainlink's keepers and some of these other components that will continue to automate the vaults over time, and automated monitoring and response, so it can really be truly decentralized DAO directed management, in terms of sort of a set and forget, and it just monitors itself, and all these security features sort of built in, and that's sort of the long-term vision. So definitely working toward automation, simplification, and community run, and more decentralization over time. So definitely not looking to overcomplicate, so not moving in that direction. So I think hopefully that's helpful.
Yeah, we've definitely focusing on the core product, and when we launched, we had a product in mind. Was Badger, for example, as you touched on, they didn't really have like a solid plan. They more kind of launched, and then they had a community development fund, and just kind of to see where it was going to take them. And for example, if you look at them, they've got an arcade, which isn't really part of a core product, doesn't really do much. And that's something that we want to avoid. We want to make sure that we keep on having our resources going into developing and specializing in a product which actually returns value to the people that are using it.
Yeah, absolutely. I think just making DeFi easy and secure and accessible is really the brand, and sticking to that brand, and not wading into other places where we're liable to kind of overcomplicate things, or maybe not as suited for. So really sticking to core competencies, and being really good at that. So with that, I think we're good to go this week. And thank you again for everyone tuning in. This was fantastic and great questions as always. And we'll see you next week, and see you around in the Discord.
Thanks, guys. Cheers.
Thanks, everyone.
Thanks, everyone. Have a good weekend.
See you everyone.